Hi, grade 12s. We are going to have a look at question 2 of the March 2025 paper that was written or set by the Free State Department. So let's have a look at question 2. We can see that this question deals with company financial statements and notes. So we then think about the statement of financial position, the statement of profit and loss, and then also the notes to our statements. Okay, so that is then very important. Basically, your cash flow statement also forms part of your company financial statements, but you will see that's going to be a separate question. So within this question, it's then your income statement or your statement of comprehensive income, or your statement of profit and loss rather, and then your statement of financial position with its notes. Okay, so when we have a look at time over here, they tell us that this question is going to be out of 45 marks, and we have 40 minutes to complete, or you have 40 minutes to complete this specific question. Okay, guys, so I know that you guys struggle setting up the financial statements, and I also know that we prefer to do the income statement because that's the easier one. But you would see that in this specific question, this is a very, very important question. You would see that they ask the effect on both the income statement by adjusting the incorrect net profit after tax, and they also ask you to set up the statement of financial position. Okay, so I'm going to show you how to deal with a question where you need the effect on both the income statement and also the balance sheet. Okay, so let's start reading through the information, and then I'm going to give you a few tips on how to deal with this. So the company is Reinhardt Limited, and we know that limited, obviously, that tells us that this is a public company. Okay, and then the theory relating to that comes in play. And then the following information relates to Reinhardt Limited. The financial year ended on 28 Feb 2025, guys. So we know that is important. As soon as we read the financial year end, we have to go and write what the start of the financial year is. So if our year ends on the 28th of Feb, you only need to add 1 day. And when you add 1 day to 28 Feb, that would take you to 1 March. Okay, so this is then 1 March, guys, is then going to be the start of my financial year. Okay, so 1 March 2024, remember, this is then the beginning of my financial year. And then the end of my financial year is then 28 Feb 2025. Okay, 28 Feb 2025. Guys, it's very important to know when your financial year starts and when your financial year ends, because we are only going to account for transactions, income, and expenses that are within these 12 months of my financial year. Okay, so it's very important. Okay. Then the business uses the perpetual inventory system. Guys, this is just something to note. You would see that you aren't going to do anything with this information, but you know then that your cost of sales will be readily available. That's basically all that this tells you. With the sale of every single transaction, your cost of sales will be updated. So this is not something to worry too much about. When they tell us that the business uses the periodic inventory system, we know that we are going to have to calculate our cost of sales ourselves, but the cost of sales will be readily available over here. So that this is all that this is basically telling us over here. Okay, so then required 2.1. Refer to information number B, guys. So they tell you exactly where to look to answer these first 15 marks. So information B. So you are going to ignore information A and you are going to jump immediately to information B. Your focus will be there and you are going to earn this 15 marks. So what do they ask at 2.1? Calculate the correct net profit after tax for the year ended 28 Feb 2025, guys. So calculate the correct net profit after tax. So this is a corrected net profit exercise, okay? And we have very few examples or exercises during our year with regards to corrected net profit, but the department have been giving us and warning us that they are going to ask this, and here it is. Okay, so it's very important, and this might actually pop up in your record exam or your prelims, and then also maybe in your final exam. Okay, we have been anticipating this for quite a while, and here it is. Okay, so indicate a plus for increase or a minus for a decrease, okay, of our net profit, guys. So what they, just to explain the concept over here, they are going to give you an incorrect net profit after tax, okay, sorry, before tax, because our adjustments are going to have to be before tax, and we're going to subtract our tax. So they are going to give you the incorrect profit, and then they're going to say, listen, please account for all of these adjustments to get the correct net profit. And this is what you can expect for this 15 marks. We will get to that now. Okay. Then at 2.2, guys, I would suggest, please take this advice from me. Read, that is why they put the required all together. And that's why they don't split it with required information, because read all of your required, because you can kill a bird with two birds with one stone over here. Okay, so this is why this is over here. So especially when they ask over here, they ask basically the income statement, right? Because you have to calculate the net profit. That comes from the income statement. And then at 2.3, you would see they ask to prepare the statement of financial position. So here they ask you to prepare the statement of financial position or the balance sheet on 28 Feb. Where notes are not required, workings must be shown. So can you see, guys, they ask in 2.1, calculate the net profit. And that is the income statement, guys. And then at 2.3, statement of financial position. So when they ask both the income statement and statement of financial position effect, then it's advisable, guys, that while you go through your transactions, that you go and update your either your income statement or your balance sheet effect. And I will show you how that works. The basic concept is your debit and your credit. So you will simultaneously do 2.1 and 2.3, guys. That is my best advice that I can give you. Simultaneously work on your effect on your income statement and your effect on your balance sheet, and that is going to lead you to the best results. And then let's see what 2.2 is. That it's prepare the retained income note for 6 marks on 28 February 2025. Okay, so basically corrected net profit, retained income note, and statement of financial position. Guys, now you would see that it's very important for 2.1, 2.2, and 2.3 to actually know your formats. Please. This is extremely important, guys, especially here with your retained income note. You have to know how this note looks. With your statement of financial position, you have to understand how this statement works. Okay, what you need to add together to get your total assets, what you need to add together to get your total liabilities. And when some of the amounts are missing in your subheadings, non-current assets, current assets, non-current liabilities, current liabilities, how to get balancing figures, guys. So please, you have to understand how the statement of financial position works. And to be able to do that, you need to know your format of your financial statement. Okay, perfect. And then your retained income note, the same thing with your retained income note. And then we will have a look at corrected net profit. So for number 1, they say skip information A, go to information B, and answer the first 15. So let's just do that. We are just jumping to information B. Here we are. Information B, this is where they want us to be, guys. Information B. So we are going to have to start reading what's happening over here, and we have to calculate the corrected net profit. So here they say net profit before tax of 2,419,100 Rand, guys. So this is your net profit before tax, okay, was determined before the following information was taken into account, okay. So can you see, guys, this net profit before tax is incorrect. Okay, that is why we call it corrected net profit. We have to fix this incorrect net profit before tax with these adjustments. So we have to fix this incorrect net profit with these listed adjustments, and it's going to continue on the next page. And then we will get the corrected net profit. So that is the principle over here. Okay. Perfect. So you will see then on your answer sheet is going to start with this incorrect net profit over here that is given to you. And then we are going to have our separate adjustments for all of the adjustments or accounts, transactions that was not taken into account. So let's go all the way down. You would see, can you see that in your answer sheet, guys? In your answer sheet, you would see that you have your incorrect net profit. There is the 2,419,100 Rand already put in there for you. And then you would see that you have all of your adjustments over here, okay? And then we will have our correct net profit before tax. Then we will subtract our income tax over here. And then we will have our corrected net profit after tax over here. And this is your 15 marks. So the principle is you will start with the incorrect net profit that is given to you, make all of your adjustments, get your corrected net profit before tax, subtract your income tax, and get your corrected net profit after tax. Okay, so now we just have to go through all of these adjustments one by one and do your pluses and your minuses over here for your adjustments. Okay, perfect. Now, information B. Let's continue. So, adjustment number 1 is that trading stock on 28 Feb, okay, trading stock on 28 Feb, this is the year end, right? So this is the trading stock at year end. Final amount was valued at 1,214,700 Rand, okay? So your trading stock at year end, guys, we did a count and it was valued. Okay, cool. That was not what I wanted. Okay, it was valued at 1,214,700 Rand, guys. So this is when you see trading stock at year end with its value, then you can immediately go to your statement of financial position, guys, because this over here, they tell you this is your final trading stock value. So you can go immediately when you see this and you can go and write this final amount on the statement of financial position, guys. So let's just go ahead and do that. 1,214,700. Okay, so balance sheet, right? Balance sheet. So we go all the way to 2.3. Okay, and we check. If it's already in there, we leave it. If it's not in there, we can write it there. Can you see here under our current assets, because that is what inventory is. It is a current asset. There is inventories. There is nothing. They did not give us the amount for inventories. It's not already in here. So we can go, that's a really easy mark, guys. They just gave us that amount. It's 1,214,700 Rand. Okay, very easy. As soon as you see the value at year end for inventories, for trading stock, you go and put it in over here. Okay, we are going to do a calculation here. You can also show, I will show you this calculation here in brackets as well, that how we get to this with the pre-adjustment amount plus or minus the adjustment to get to the 1.2 million, but you can immediately go and write it in your final column next to inventories without even showing this calculation. Okay, so there's already a portion that we solve or an amount that we have in our statement of financial position. Okay, guys. So that is then very important. So what you do then, guys, when we know this, when an amount is given to you, when trading stock value is given to you at year end, right? You always have to go and compare this to your trading stock um, as on your trial balance. Okay, so let's have a look. This is my list of balances or totals, right? So you go and you look for trading stock. Can you see here is trading stock? Trading stock in our books, according to our accounting system, is 1,213,600 Rand. So you go and you highlight trading stock, okay, and the trading stock amount is that in our books, okay? Can you see that these two amounts, the trading stock on your trial balance and your trading stock final value, there's a slight difference between the two. And remember, then we are working either with a trading stock deficit or with a trading stock surplus. So this first adjustment triggers either a trading stock deficit or a trading stock surplus. Now, when this final value is more than the amount on your trial balance, which is the case, 1,214,000, sorry, 13,000 in my books, and the final value as we counted is 1,214,000. So this final value that it should be is more than the value in our books. Okay, so if the final value is more than the value in our books, guys, then we call it a trading stock surplus. Okay, so then you can go ahead and you can go to your adjustment, right? Let's go over here. You would see there's a line for you to write, either deficit or surplus. So it's a trading stock surplus. So that's what you write over here. It's a trading stock surplus. Why? Because my final value is more than the value in my books. Okay. So we have more trading stock in our storeroom than what our accounting system currently shows. So therefore, it's a surplus. And then you have to go and show in brackets what our calculation is to get your adjustment amount. Okay, so your calculation would then be your final amount, your final value that they had given to us. It's 1,214,700. Okay, so you would say it's 1,214,700. Guys, this is the final value that we counted. This is in our storeroom at the end of the year. This is the correct value. And from that, we have to go and subtract the value according to our trial balance. Okay. And the value according to our trial balance, according to our accounting system, as you can see, is 1,213,600. So we have to go and subtract that from our actual value. So 1,213,600. Okay, close your brackets. So quickly take the amount that it should be minus the amount on the trial balance, and then you would get your adjustment amount. So it's 1,214,700 less 1,213,600, and that would give you a difference of 1,100 Rand. Okay, so 1,100 Rand. That is the difference. But now we have to decide. The information said that we have to adjust this incorrect net profit. Are we going to add 1,100 Rand to this incorrect net profit, or are we going to subtract it, guys? Trading stock surplus, okay? So a surplus is an income. A trading stock deficit is an expense, and an expense decreases profit. But a trading stock surplus increases your profit, guys. It's an income, so you will plus the 1,100 Rand. Now let's just quickly go. I would suggest, this is actually my my suggestion, that you always, for every single adjustment, quickly go and write the debit and the credit. That is the only way that you would solve your effect on your income statement and your balance sheet simultaneously. Okay, so when we have a look at number one, the account that we are going to debit, right? You always have to tell yourself trading stock surplus. This is a trading stock surplus. What type of account is trading stock surplus? It's an income. So an income is on the credit side. So you are going to say, listen, trading stock surplus. Okay, this is the account that is going to be credited, right? Because this is an income. What is the amount? It is 1,100 Rand, okay? So this is the credit account. So what are we going to debit? We have to increase our trading stock. Okay, so trading stock. We debit trading stock with 1,100. We have to increase our trading stock, guys. This is the principle behind it. We have to increase our trading stock from this incorrect amount to the amount that we actually counted. So we have to increase our trading stock, right? That is why we debit trading stock with 1,100 Rand and we credit trading stock surplus with 1,100 Rand. And then you just have to make sure that you account for both of these debit and credit entry, or this debit and credit entry. You have to make sure that you account for it in your income statement and in your balance sheet. Now, when you think about it, our trading stock, we already wrote this 1,214,700 on the face of our balance sheet. And this amount is the correct amount. So we don't have to make the adjustments to our trading stock. What you can do is you can go and show in brackets to get to this amount. You have to say it's your 1,213,600 plus your 1,100. So we can go and do that. As I said just now, you can go and show, you don't have to, but if you want to, you can go and show that it's the 1,213,600 as per the trial balance, the incorrect amount of inventories. But then we have to go and add our surplus of 1,100, which gets us to our total value that we already written in here of 1,214,700 Rand. Okay, so can you see how the effect of this 1,100, we did it in our income statement by increasing our profit since it's an income, and we also have to increase our inventories with this surplus. So there we have accounted for the debit and the credit. Can you see we have accounted for both the debit and the credit in our financial statement. So then you know it is complete. And if I could give you advice, just after you have done your debit and your credit and you've accounted for both, just draw a line through it so that you can remember that you have accounted for both of these, and then also show yourself that you are done with that first transaction. Okay, then we can move on to the second one. Okay, they say that rent for March 2025 had been received in advance. Okay, so this is where we have to focus. Rent, okay, so we can either pay rent, then it would be rent expense, or we can receive rent, and then it is rent income. So when we read carefully, we can see rent received, guys. So we received this rent. So that then means it's rent income. Okay, so it's an income for us. All right, so this is rent income. So rent for March 2025 had been received in advance. Okay, so can you see our financial year ends on 28 February 2025. Now, we had received our full 12 months of rent income, right, up until 28 February, but we received the rent for March, one additional month we received in advance. So now you always have to go and write for how many months, right, have you received rent in total then? You've received your full 12 months up until 28 Feb plus an extra month, guys. So that then means for adjustment number 2, your total months, okay? You always have to go and identify the total months. Okay, so your total months for which you received rent income is 13 months. Okay, do you agree with me? Within my trial balance, I have received rent income, guys, and that's very important. Rent income. Okay, not rent expense. We received the rent, so it's rent income. We received it for 13 months, guys, but we have to remember that we only want to account for 12 months' rent income, not 13 months. So we will have to calculate what the rent income amount was that we received for the 13th month for March. And we have to go and subtract this amount from our rent income in our trial balance because we only want 12 months' rent income. So that is the problem. We don't want 13 months, we want 12 months. Okay, so therefore you need your adjustment amount for 1 month's rent income, and that is the problem. Okay, so then they say rent increased on 1 October 2024 with 10%. Okay, so rent increased on 1 October 2024 with 10%. So guys, with this, we all know this has been coming since grade 11, right? Or since grade 10. This rent income adjustment, some of you really struggle with, but you, as I said, you have to identify your total months, and then you have to go and split those total months, which is 13 months, between months with the increase of 10% and months without the increase of 10%. Right. So let's just quickly go and count. Our financial year, we know our financial year starts on the 1st of March. So you are going to count from the 1st of March up until right before the 1st of October, because this 10% was in effect on the 1st of October or came in effect. So you are going to count from the 1st of March to the 30th of September. That is right before the 1st of October. And this will represent the number of months that there wasn't an increase, your normal rent amount. So let's just quickly count. So it's March, April, May, June, July, August, September. So that means 7 months, guys. So 7 months. For 7 months, there was no increase in my financial year. All right. For 7 months, there was no increase. Okay. Can you see they did not give me the specific amount that was paid in advance for March? We have to calculate that. Okay. So because the rent for March is unknown, we call the monthly rent, we call it X. Okay. So guys, X represents the number of, X represents your monthly rent without the 10% increase, your normal rent. Okay. Now, let's do this. Now, we know 13 months. We received rent for 13 months. Now, 7 months out of the 13 months is your normal rent. The X represents normal rent without the increase. Okay. Now, obviously, because we need to get from 7 to 13. So how many months are left to get from 7 to 13? There are 6 months left, right? To get from 7 months to 13. But within this 6 months, this is now from the 1st of October up until the end of my financial year, which is the 28th of Feb, right? So you have to count. Okay, so we don't have to count. We already know it's 6 months. But for this 6 months, it's not just my normal X, okay? For this 6 months over here, it's going to be plus that 10% increase in rent, okay? So guys, a 10% increase looks like this. It's normal decimals. A 10% increase would just be, you would just times it with 1.1. A 20% increase you would just times it with 1.2. a 30% increase, you will times with 1.3. Okay, the 1 represents the original amount, the 1 before the comma, the whole number, represents the full amount, and the decimal portion represents 10% or 20% or 30% increase. Okay, so that's why we can multiply with 1.1, 1.2, 1.3, whatever, depends on what the percentage is. So in this case, it would be, we are going to multiply with 1.1. Okay, so you are going to make a bracket next to your 6, and you are going to say, we aren't just going to multiply with the normal x. We're going to multiply with 1, 1x. Okay, remember the 1, 1 represents your, this whole number over here represents your normal rent, and this comma 1 represents the plus 10%. Okay, so for this 6 months, we have to increase our normal rent, which is x, with 10%, which is 1.1. Do you understand? So that is what we have over here. Okay, so please remember then that this is going to form part of your solving x equation. So to write your equation, you are going to say 7x, okay, which is 7 months times your normal rent without the increase, plus your 6 months times your increased rent, okay? That is going to give you the total rent in my trial balance. Okay, so when we go and have a look at our total rent in our trial balance, let's just look for, it would be in the nominal account section. We know we are working with rent income, and we can see that the total rent that we had received up until 28 Feb, including this for March, is 204,000 Rand. Can you see rent income? 204,000 Rand. So we have to equate these this equation to 204,000 Rand. Okay, perfect. So there is your equation to solve x then. Okay, so when we then solve x, when we multiply in 6 times 1.1x, you are going to get, you can just type it into your calculator, 7 plus 6 times 1.1, and that would give you 6.6. So this would then be 13,6x, okay, would be equal to 204,000 Rand, okay? And then the 13.6 to get x alone, all you have to do is you just have to divide by 13.6. So you're just going to say 204 with 3 zeros, 204,000, and you're going to divide the 204,000 with 13.6. And then you would get that x is equal to 15,000 Rand. Okay, x is equal to 15,000 Rand. Okay, perfect. Guys, why are we doing all of this? We want the amount for March because we received it in advance. We want to take this out of our financial statements because it is an amount that we receive for the next financial year. It shouldn't be. We only want 12 months. We received 13 months. We need the amount for this 13th month, and we want to subtract it from rent income. Okay, but remember, we solved x now. X is 15,000, right? But what does x represent? It represents the amount without the increase. And remember, it was increased on the 1st of October. So that means that March would be the amount including 10%, right? So therefore, all you have to do is you just have to take this amount. Therefore, your adjustment amount is always going to be your x amount, your normal amount, and then we have to increase it with the 10%. And then your adjustment amount would then be, when you say 15,000 and you multiply it with 1.1, you would get that your adjustment amount is 16,500 Rand. Okay, can you see it's trouble, guys? It's a lot of effort to get to your final answer, but you need to do this to get your answer. So the adjustment amount, this amount for March, the one rent income that we received in advance, the 1 month's rent income that we received in advance was 16,500 Rand. Okay, so now that we know that, now we can quickly go and write our debit and credit, and we can ensure that we do the right thing in our income statement and on our balance sheet, since we have the amount now. So, guys, you always start with the received in advance, with the asset or liability portion of your debit and credit. So, income, rent income that we received in advance. So, guys, income received in advance. That's the first account. Now, income received in advance is a liability, okay, because we technically owe it to the next financial year. So it's then going to be income received in advance. Okay, so it's income received in advance. This is a liability, guys. It's a liability. So therefore, this account will be credited with 16,500 Rand, right? Income received in advance. Now, what type of income did we receive in advance? Rent income. So that's going to be my contra account. So what type of income did we receive in advance? We received rent income in advance, and then that is the account that will be debited. Okay, perfect. So guys, the debit side is always first, and the credit side is then second. Okay, so rent income will be debited with 16,500 Rand. Okay, rent income debited with 16,000, and income received in advance, the liability will obviously then be credited with 16,500 Rand. So this is what's going to help you to make your adjustment. So rent income, guys, income is normally, when income increases, it's normally on the credit side, right? But we are debiting income. That means we are reducing the income, which makes 100% sense. We don't want income for 13 months. We want income for 12 months. So we have to reduce our rent income of 204,000, which was rent income for 13 months, and we have to reduce it with 16,500. And when we reduce income, our profit also reduces. So the 16,500, guys, has to be deducted. Can you see rent income? We have rent income over here. We just calculated everything, and we are going to subtract the 16,500 that we had just calculated. We just determined that our rent income has to decrease because we received income in advance. So we have to take away what we received in advance, and that is why we subtract the 16,500 Rand over there. So there we have accounted for the income statement effect, right? Now we have to account for the balance sheet effect. So we have just accounted for this debit entry. Now we have to account for this credit entry over here. So this is a liability. We know that income received in advance, that goes to trade and other payables in our notes specifically. So this liability, 16,500 Rand, we have to go and add this to trade and other payables. Okay, so you go to your balance sheet. You go to your balance sheet, and you have to go and add 16,500 to trade and other payables. Okay, can you see, guys? This is the way that you ensure that you do everything 100% correct without having to go through all your transactions again when you get to your balance sheet. Okay, and once again, there we have everything. Then just draw a line, guys. Leave your calculations everywhere, please, for us to see. But then just through your debit and your credit, because this is actually not a required, just draw a line through that, because then you know that you have accounted for it both in your income statement and also in your balance sheet. Okay. Then we move on. We can also draw a line. We have done that now already. Then the next one, they say provision for bad debts must be adjusted to 4% of the debtors. Okay, this is you usually struggle with this as well, but then when you see it once, when it's explained to you once, it's really easy. So guys, provision for bad debts. This is a liability, okay? Provision for bad debts. This is a liability. That is why you will see it under the balance sheet account section. Can you see over here, provision for bad debts on the 1st of March 2024, it's 11,500 Rand, okay? This is a liability and it's usually subtracted from your debtors control to get your net debtors, okay? So the provision for bad debts must be adjusted to 4% of the debtors. What they are telling us over here is that the provision for bad debts, what is it currently? Our provision for bad debts on the 1st of March, guys, can you see as at the beginning of the financial year is 11,500 Rand. We are saying that we want to change this amount over here. We don't want it to be 11,500 Rand anymore. We have to change this provision for bad debts to 4% of the debtors, okay? Now, what is 4% of the debtors? You have to go to your debtors control. Your debtors control is 290,000 Rand. That represents your debtors, okay? So you have to go and do exactly what they say. So for number 3, you have to go and you have to say, listen, to calculate my new provision for bad debts, we have to do exactly what they say, 4% of debtors. So you have to take your debtors, which is 290,000 Rand, your debtors control, right? It's 290,000 Rand, and we have to take that and we have to multiply that with 4%. And then you would get your new amount that your provision for bad debts has to be. So quickly take 290,000 and multiply it with 4%, and then you would get an answer of 11,600 Rand. Okay, so can you see this is what they told us to do? We don't want this amount, this 11,500 anymore for provision for bad debts. We have to change it to 11,600. Okay. So perfect. So the difference between our amounts, what it was in our pre-adjustment trial balance to what it should be, you can see it's just 100 Rand, guys. Okay, so the difference is just 100 Rand. But so that's basically going to be our adjustment amount. So what is our debit and credit over here? So this is, you have to think about, you have to look, did my provision for bad debts increase to this new amount, or did it decrease to this new amount? So you would see it increased from 11,500 to 11,600. So when your provision for bad debts has increased, okay, when it has to increase to a new amount, then your liability has to increase. Do you understand? Because provision for bad debts is a liability, so you have to take it from 11,500 to 11,600, so your liability increases. And therefore, the provision for bad debts, the actual provision, the liability, guys, that will have to increase with 100 Rand. Do you understand? It has to change from 11,500 to 11,600. So your liability has to increase with 100 Rand. Now, what do we call the debit entry? We call that exactly what it is. It is the provision for bad debt, the provision for bad debt adjustment. Okay, so this is the adjustment. Guys, the provision for bad debt adjustment can either be a liability, can either be an expense or it can be an income. Okay, so when your liability increases, your provision for bad debt adjustment has to be debited, right? Because this liability has to increase. This is a liability. So that then automatically puts your provision for bad debt adjustment as an expense because it has to be debited. Do you understand how this works? So you first ask yourself, is my provision for bad debt increasing or decreasing from the original amount to this amount? We just said it increased. If it increases, the provision for bad debts, the actual liability has to increase with the difference, which is 100 Rand. Then the other 100 Rand then has to be on the debit side, and then that would be my provision for bad debt adjustment. So this is then an expense. So this 100 Rand, guys, this is an expense, right? The provision for bad debt adjustment is actually an expense. Can you see here? They have it. They have provision for bad debt adjustment. We just said that this is an expense. So you can say over here that it's the 11,600 less the 11,500, right? If you want to, it's better to show your calculations, okay? And then the difference is 100 Rand, right? So my adjustment amount is 100 Rand, but then because this is now an expense, our profits will decrease, okay? So that was that. Now, so we had just accounted for the income statement portion of this debit and credit. Now, for the liability portion, guys, we have to be careful, right? What we have to do is we actually have to go and we have to subtract from our debtors control, right? From our debtors control, we just said that. From our debtors control, right, of 290,000 Rand, you always have to go and subtract your provision for bad debts. And then we increased it with 100 Rand. Okay, so let's just go and do that. Let's just go to our debtors control then on our balance sheet at 2.3. Trade and other receivables, guys. Can you see trade and other receivables? This is the same as debtors control. There is our 290 already in our bracket. So what we have to do to get our net debtors is you have to go and subtract your 11,500 Rand, your provision for bad debt, okay? And then you also have to go ahead and you have to go and account for your adjustment. Okay, so we also have to further subtract another 100 Rand because we had increased this provision for bad debt with 100. So that is why it has to be negative. You subtract the original provision, and then because the provision increased, we had to subtract another 100 Rand to make it even more, to increase the expense basically, or the liability. Okay, perfect. So that is why we have to, guys, you can also just erase this and you can also just say minus 11,600 Rand, the amount that it should be. Okay, perfect. So there you have accounted for your both your debit and your credit entry, and then you can draw a line through that as well. Can you see you are it's more effective to do it this way. Then we are moving on to the next one, which is adjustment number 4. They say an annual insurance premium of 9,600, guys, annual insurance premium, annual insurance premium. What is insurance? Insurance is an expense. Okay, so we have paid a full year's insurance. How much did it cost us? It cost us 9,600 Rand. And for what period? For 1 October 2024. Yes, that is within our financial year. But look to where this goes. It goes all the way up until 30 September 2025. And that is not within our financial year. So can you see that the essence of this adjustment is that we are going to be working with a prepaid expense. Prepaid expense. Okay. Because insurance is an expense, and we paid for a full year, 9,600 for a full year, and it covers 1 October to 30 September 2025, which is beyond our financial year end. Okay, so once again, guys, we always then want the portion that is outside of our financial year. We need to calculate that adjustment amount, and we have to subtract that. We only need to account for the insurance payments that we, or the insurance expense within the financial year. Okay, so do you get that? Let's just quickly count the months that fall outside of the financial year. So basically, we have to count from the 1st of March 2025 up until the 30th of September 2025. Those are going to be the months that fall outside of our financial year. So March, April, May, June, July, August, September. If you counted with me on your fingers, you would have 7 months. So we have prepaid for 7 months. Okay. Prepaid for 7 months. Okay. So we need to get, it's actually extremely easy. This calculation is not that bad. Let's just go down and do our calculation for adjustment number 4. We had paid 9,600 Rand for a full year, and we have paid a portion of this in advance, so therefore it is prepaid expenses, guys, and we know that prepaid expenses is an asset. So you always start with your asset or your liability, your prepaid, your received in advance, whatever, because you know if it's an asset, it will be debited. If it's a liability, it will be credited. Okay, so prepaid expenses, guys, this is an asset, right? This is an asset. So this is the account that will be debited. Okay. Then what is the other account? What expense did we prepay? And that is then insurance. Okay. So this is my contra account. Insurance is the contra account. So that is the account that will be credited. Now we need the actual adjustment amount. And it's very easy, guys. We just take the 9,600 and we multiply it with 7 out of 12 months. Okay. Why? Because they say it's a yearly contract. So that means the 9,600 represents 12 months. Okay. And then 7 out of the 12 months fall outside of our financial year. We don't want that in the current financial statements, right? So we need to go and reduce our expense with the 7 months that was prepaid. So that is why we are crediting the expense. Okay, now let's just quickly get the answer. So then quickly say 9,600 times 7 over 12, and that would give you an adjustment amount of 5,600 Rand. Okay, so my adjustment amount is 5,600 Rand. This 5,600 Rand falls outside of our financial year, and therefore we have to go and reduce the insurance expense. This is not the expense for our current year, and then our prepaid expense, our asset, needs to be debited with 5,600 Rand. Okay, once again, we have to ensure that we account for both the debit and the credit, and then we draw a line through the debit and the credit. Okay, so prepaid expenses, this is an asset. So according to what you have to study in your notes, you know that prepaid expenses falls under trade and other receivables. Okay, and this 5,600 Rand will have to be added to your trade and other receivables on your statement of financial position. So let's quickly go to the statement of financial position, trade and other receivables. Can you see over here, we have to go and add 5,600 Rand for the prepaid expenses, okay? And then, so there we accounted for the statement of financial position effect, okay? We have accounted for the statement of financial position effect, that one. Now, all we need to do is the income statement effect. We are crediting an expense. So that means the expense will be lower. And when we lower an expense, when we reduce an expense, our profits will increase. So therefore, we are going to add 5,600 Rand to our profits. We are going to add 5,600 Rand to our profits. So our adjustment amount is 5,600 Rand, and we are going to add the 5,600. Why? Because we are reducing our insurance. Okay, and you can just go and show over here that it is the 9,600 for the full year. And then we have to say, listen, 7 months out of these 12 months, does not fall within our financial year. So we are taking it out of the insurance expense, and that is why our profits are increasing, because an expense is decreasing. Okay, perfect. Then we can go to our next adjustment, and then also we can go and draw a line through this debit and credit because we put them where they need to be. Okay, then we can also draw a line through adjustment number 4. Now, adjustment number 5, let's read this. The auditor discovered that the profit on disposal of a vehicle, 4,900 Rand, was incorrectly shown as a loss. Okay, so this was a mistake made by the accountant, and the auditor had picked that up. Okay, so the auditor discovered a profit on disposal of a vehicle. It should be a profit of 4,900 Rand, but the accountant incorrectly showed it as a loss. Okay, guys, now over here you have to think carefully. So listen with me what has to be done over here. To fix this mistake, we will have to make a double entry to correct this mistake. We first have to reverse the mistake that the accountant had made. The accountant had this 4,900 Rand as a loss. Okay, so look here, the accountant, let's just go to adjustment number 5. Let's just write it down here. So adjustment number 5, the accountant had the 4,900 Rand as a loss. Guys, what did this loss do, right? It reduced my profits, okay? So it was subtracted from my profit. So to fix this, we first have to add 4,900 Rand, okay, to fix the mistake, right? To fix the mistake. And then the effect on my profit now is 0. Because look, what did the accountant do? The accountant subtracted this. It shouldn't be subtracted, right? So to fix the mistake, we have to add back this mistake to make the effect 0, right? Okay, so now we fixed the mistake, but now we still have to account for the profit, right? Because the profit needs to increase our net profit before tax, right? So therefore, we further, now that the effect is 0, right? Now we have to go and add another 4,900 Rand to say that we had made a profit. So it's first fixing the accountant's mistake, okay? Basically, by having a 0 effect, right? So having a 0 effect with these two over here, okay? And then we add the profit, which should increase our profits. Okay, so can you see that we had to double count? So we had to say plus 4,900 to fix, plus 4,900 to actually now account for the profit. So then my adjustment amount, guys, is going to be 9,800 Rand when you add those two together, double counting fix and then to account for the actual profit is 9,800 Rand. Okay, perfect. So that's all we need to do to fix this mistake. Okay, let's go ahead, guys. And then also, this mistake happens in your debit and credit is obviously going to happen within your income statement already. So there's no balance sheet effect over here. You just need to go and add 9,800 to your net profit calculation. So this is our net profit calculation. So can you see that the next line item is correction of errors? So we have to show over here that it's the 4,900 Rand. Okay, we take that and then we add 4,900 to correct the accountant's mistake, and then we have to add another 4,900 to actually account for the profit. Okay, and therefore we have to increase our profits with 9,800 Rand. Okay, The first 4,900 will fix the mistake and it will bring the effect back to zero. And then we have to, the next 4,900 will increase the net profit over here. That's why we are double counting over there. Okay, then we move on to our director's fees. Okay, so we are done. This is just a calculation. There's no debit and credit. Okay, so it's basically just going to be the debit and credit. Sorry, there is a debit and a credit, but the debit and credit happens within profit and loss. So there is no effect on your statement of financial position. So therefore, we just do it in the income statement or to your profit. We just make the adjustment to profit. Okay, perfect. So now we are done with that one. And then now we have to read this, and this is the most difficult adjustment of them all. So please just pay attention to this one. So they say that the company had 2 directors who received a combined annual fee of 1,065,200 Rand. Remember, guys, these words are very important. They had 2 directors who received a combined annual fee of 1,065,200. Okay, and their monthly fees, they get monthly fees, were increased by 5,800 Rand each on the 1st of October. Okay, so let this sink in quickly. It's not that difficult. 2 directors, we know directors get directors' fees on a monthly basis. Okay, now these 2 directors that we had from the beginning of the year, that means that they had received 12 months directors' fees, right? These 12 months directors' fees added up, right? Combined. So for both the directors added up is 1,065,200 Rand. But for a few months, they received their fees without the 5,800 Rand, and from the 1st of August to the end of the year, they received an additional 5,800 Rand. So that's what that is all about. Then they say a 3rd director joined the company on 1 November 2024. So during the current financial year, on 1 November, and received the same monthly fee as the other directors, excluding the increase of 5,800 per month. This director's total fee is still owed. Okay, so this is an accrued expense or an expense payable. I like to use the expense payable. I always tell my learners to use the expense payable because then you know it goes to trade and other payables. Okay. Now this calculation is what is going to be, there is more than one way to do this calculation. So if you get to the answer using a different method, that's totally fine. So let's just go to this last adjustment over here. Okay. And then we know once again, guys, with these increases and what, we are going to set up an equation, and we are going to have to solve for x. You're going to have to make peace with that, and you're going to have to keep practicing that, and that is where the marks are going to be. So you can't just keep ignoring this, thinking that it's too difficult for you. Okay, we all can solve x. The difficult part is just by setting up the actual equation. So let's just quickly think about this. I told you once again, right, guys, we have 12 months. Our total months is 12 months, right, for our 2 directors. What do we need to do? We need to calculate the method behind the madness over here is going to be the following. Our focus is going to be with this 1,065,200 and for what these directors earn, because this 3rd director, for which we still owe the money, we need to calculate his remuneration. That's going to be the accrued or payable amount, but he gets the same as what they get. So we are going to use their information to get their, remember, it's excluding the 5,800. So we have to calculate what their monthly director's fee is without the 5,800. And then once we have that fee, that's going to be the fee that we are going, that we owe this new director but for the number of months that he has been working for us. So that's the method behind the madness. So the first focus is we need to get the monthly director's fee for these two directors. Okay, so that is the method or the thinking process. So now we have to, once again, we have to split these 12 months. They received director's fees for the full 12 months, but for 5 months at your normal director's fee, and that then means 7 months at your increased director's fee. There we go. So now we can go and say, listen, 5x plus 7x, but then we have to multiply the 7. Remember, it's the 7 times the x and then the 7 times the 5,800. So 7 times 5,800 is 40,600. So plus 40,600 Rand. Okay, when you multiply out that bracket, that should give you, now here is where we have to think. We are currently busy only with one director's fees. Okay, that's why we say 12 months. If we wanted to use it for two directors, which is the other way to do it, you would have used 24 months, right? Because the total payment for both directors, right? The total payment for both directors, this 1,065,000. This is for 24 months because it's for two directors. Okay, but I'm only doing it for one director. So we have to cut this amount. We have to half this amount because I'm only doing this calculation for one director. So we need to take the 1,065,200 and we have to divide it by 2 because we are only working with 12 months and 12 months is only for one director. So therefore, when you take that amount divided by 2, you can equate that this one director in his 12-month period would have received 532,600 Rand. Okay. And then now you add up your x's. Obviously, your x is 5x plus 7x is going to give you your 12x. Okay. And then we have to take over that 40,600, which is going to be it's going to reduce the 532,600. So 532,600 minus the 40,600. That is going to give us 492,000 Rand. 492,000. And to solve x, obviously, guys, we need to just divide by 12. So then to get your x, and remember, we only want the normal amount. So it's 492,000 divided by 12. And that would give you guys the answer of 41,000 Rand. Guys, so that means that the normal fee without the increase, remember, always when you solve x in accounting, it's your normal fee without your increase or your decrease. Okay. So, and this is what we want because the new director does not get the 5,800. So this is what the new director gets. But we aren't done yet, okay? Because now we have to read how long the third director had been working for the company. So the third director started on the 1st of November. So November, December, January, February, from the 1st of November 2024 to 28 Feb 2025 represents 4 months. So this new director had been working for the company for 4 months. So this is a per month amount. This 41,000, right, is a per month amount. So therefore, we have to multiply this per month amount with the 4 months that this director had been working for this company. And then this is going to be the amount that we are going to owe. The payable amount is going to be 164,000 Rand. So we owe this new director 164,000 Rand. Okay, so there we have our final amount. Okay, so now we have to think about our debit and our credits. Okay, so this is an account payable. Okay, expense payable, right? So therefore, an expense payable is a liability. So an expense payable or an accrued expense, right? Expense payable, we always start with our liability or our asset. In this case, expense payable liability, and there we write the 164,000. So we know that the other account has to be debited, and then you just ask yourself, what expense is payable? What expense do we still need to pay? And that is then directors' fees. Okay, directors' fees. Okay, perfect. So now we just have to make sure that we account for this. So we know that directors' fees is an expense, and it's an expense that is debited. So my expenses are increasing, right? When we debit an expense, expenses are increasing. Okay, so we know that the 164 has to be written down over here. Directors' fees is the 164,000 Rand, 164. But this is an expense that is increasing, and an expense that is increasing decreases my profits. Okay, and so there we have accounted for the expense portion, which decreases profits, and then our expense payable, this is a payable, so it will go to trade and other payables on the face of my statement of financial position. Okay, so we are going to do that now. Trade and other payables, here it is. Trade and other payables, right? Trade and other payables. To this, we now need to go and add 164,000 Rand as well. So guys, can you see how you do two things at once? Okay, it makes life so much easier. Okay, perfect. There we go. And now you can also see that we are done with the last adjustment. This adjustment only says income tax amounts to 676,500 Rand for the year. Okay, so that is then going to be our income tax over here. Okay, so we just read about the income tax, so we can go and write, guys, please. Income tax is subtracted from profit. So please always put income taxes in brackets on your income statement. So it's 676,500. This was given to you just now. So you can put that in next to your income taxes, and then we can now go and calculate our correct net profit before tax by taking the incorrect net profit before tax, and then adding out and subtracting all of these adjustments, and then getting your correct net profit before tax. So quickly take your calculator and say 2419,100 minus, sorry, it's a plus 1100 minus 16,500 minus 100 plus 5,600 plus 9,800 minus 164,000 Rand, and then that would give you your answer of your correct net profit is 2,255,000 Rand. Okay, here we go. And then you subtract your correct net profit, your income tax from your correct net profit, and then subtract 676,500, and then you get your final profit of 1,578,500 Rand. Okay, guys, so that is how you do the first 15 marks. But guys, this feels long because I'm explaining this in detail to you. But the more you practice this, the easier the debit and credit is going to become. And then the quicker you'll do these type of questions, because you are doing both the statement of financial position effect and also your income statement effect. Okay, so you are earning marks at two places already by doing it the way that I am teaching you now. Okay, so please practice it this way. So now you have earned your full 15 marks over there. You already have a few marks on your balance sheet, And now we can just continue with 2.2, which is the retained income note on 28 February 2025. Guys, please, once again, you need to, before even answering this, we know the format. You need to go and study your format of your retained income note. And you know that we have our balance at the beginning of the year, right? And then we always add our net profit, okay, our net profit after tax. So net profit goes over here. The profit that you just calculated, guys, from your income statement always goes in your retained income notes. Now, a profit you will add, okay? So a net profit we had just calculated. Can you see net profit after tax? You can write net profit after tax, whatever, as long as this 1,578,500 Rand is reflected. It's taken from the income statement to this note over here. So please, guys, always do this. Even if this amount is incorrect, you will get your with error mark. So your 1,578,000 Rand, sorry, 78,500 Rand. Okay, so your net profit after tax, you first go and add that over there. And guys, your format would have helped you to remember that this is where this goes. Okay, then also we are going to have to read further for this line over here. But your dividends, it's interim. The interim dividends is already filled in for you. And then you know that the only other dividends that we can have over here is our final dividends. And we are going to read about our final dividends, and we are going to put the calculation in there. One thing that you can also do, guys, is, and you forget that, dividends, we pay dividends out of our profits, out of our retained income. So dividends, guys, reduces. Please remember this. Put your dividends, your total dividends in brackets. Once you have added your interim dividend with your final dividend, once you have added these two, please remember that this should be in brackets. Or actually, when you do your format, when you write net profit over there, when you write your final dividend over here, go and put your bracket there as your total dividends already, so that you don't forget that your dividends has to be subtracted. Okay, perfect. Now let's go read information to fill in the rest of this retained income note. Okay, so let's move up to look for information with regards to dividends and shares, and you will see that information C talks about dividends and shares. Okay, so your interim dividends of 480,000 Rand were paid on 1 September 2024. Okay, guys, so interim dividends, right? Interim dividends of 480, it was already paid. Okay, it's through the bank on the 1st of September 2024. And guys, this is already completed. Can you see? It's already in there. Interim 480,000. So we can move on and we can read the next bit of information. So they say the directors declared a final dividend. We need to calculate the final dividend amount. So here they give us the information of 27 cents per share on 28 Feb, guys. So at year end, guys, when they declare final dividends at year end, that dividend is not going to be paid. It's declared. So that means that we still have to pay this dividend. So at year end, it is going to be a payable. That is very important with your final dividend to remember. On all shares issued to date, shares repurchased on the 1st of February 2025 do not, guys, do not qualify for final dividends. Okay, so we can see that there was a share repurchase, and we know that there will always be in all of your papers, in your prelim and also in your final, you will see a share repurchase. So you are going to have to practice and practice and practice that. Okay, so to calculate this final dividend, guys, you always need your number of shares. It's as easy as number of shares times the dividend per share. Okay. So the first thing that we need to get is our number of shares. Now, on the 1st of March 2024, we had 2 million shares in issue. Okay. And then on the 15th of July, we issued 400,000 new shares. So 2 million plus 400,000, that gets me to 2.4 million shares that were in issue. And then on the 1st of Feb, which they talk about over here, this is the share repurchase. Now, the company repurchased 120,000 shares. Okay, we don't worry about the rest, guys. We only want the number of shares that qualify for the dividend. Okay, so it's 2.4 less the shares that were repurchased because they do not qualify for the final dividend. So when you take 2.4 million and you subtract the 120,000 shares that do not qualify for a dividend, you get your number of shares that qualify for the dividend. And then you can go and write that in your answer sheet. So you can make your brackets and you write your number of shares that qualify for a final dividend. And that is then 2,280,000 dividends that qualify for a final dividend. Okay. And then you have to multiply that with 27 cents. Guys, remember 27 cents is 0.27. Okay, so please don't multiply this amount. I've seen kids do that or learners do that. This is 27 cents. It's 0 Rand and 27 cents. So you have to take the 2,280,000 shares that qualify for dividends and you multiply it with 0.27 and then you would get your dividend. So take that, multiply it with 0.27 and then you would get your dividend. Okay, and your dividend is then 615,600. Okay, that is then your final dividend that you declared. Okay, perfect. So guys, I see you struggle with this final dividend. It's just the number of shares that qualify for the dividend times the price of the dividend. Okay, and then you get your answer. Now we can add the 480,000 plus the 615,600 because these two together will give me the total dividends. Okay, so quickly say the 615,600 plus the 480,000. That gives me total dividends in my brackets of 1,095,600 Rand. Okay, that is the dividends, okay, that we work with. And then we also have to go and add our share repurchase. We know that when we repurchase shares, when the share repurchase price is higher than the average share price, then it's going to affect our retained income. Okay, and then also that is the case over here. So our share repurchase, when you have a share repurchase, sorry, I made it sound like only the one part is going to affect that over here. But when you have a share repurchase, you have to write your share repurchase in over here. It's going to have an effect on your retained income. Okay, so your share repurchase is the last part that you are going to need in your retained income. And this is going to be a calculation, guys. Your share repurchase, now we have to go and read the information. At what price did we repurchase the shares and all of those type of things. So we had went through this already. So the share repurchase is on the 1st of Feb. 120,000 shares were repurchased at 1 Rand 45, guys, not at 1 Rand 45 by itself. 1 Rand 45 more, this is very important. 1 Rand 45 more than the average price. When they give you it like this, you have to be thankful because that means that you don't need to go and calculate the average price, okay? And get the difference between the price that they paid for the repurchase price, and the average price, okay? Because remember, you have to take your repurchase price, okay, repurchase price, and you have to subtract your average price. Or you actually just have to check which one is higher. Okay, now when your repurchase price is higher than your average price, okay, then you have to um, basically you have to pay for the increase, for the appreciation in the share value, because it's worth more than the average price. And that is why we have to subtract this from our retained income. Okay, so over here they give you, you are just going to say 120,000 shares that was repurchased times the 1 Rand 45, and that would be the effect on your retained income. Okay. The other way they can ask this is they can give you the full repurchase price, and then you have to go and calculate the average price yourself, and then the difference between the full repurchase price and the average price, that would then give you this 1 Rand 45, and then you would see that it's going to reduce your retained income. Okay, so we just say they made it easy for us. 120,000 times 1 Rand 45. That is your calculation. Okay, so it's the number of shares that I had repurchased, and I multiply it with the amount that is above the average share price, and that is 1 Rand 45. So you take your 120,000 multiplied with 1.45, and that then gives you 174,000. Guys, now look here. So if your repurchase price, okay, if your repurchase price is more than your average price, okay, when your repurchase price is more than your average price, okay, you have to subtract. You will subtract the amount. So this 174,000, you will subtract from retained earnings. And this is exactly what they said in the information, right? They said the word more. Can you see? The repurchase price, it was 1 Rand 45 more than the average price. And therefore, you would subtract it from your retained income. Okay, we have to compensate the shareholders for the appreciation in the share price. Okay, so we subtract this from our retained income if the word more is over there. Okay, or okay, in this case, let's just stick to this paper. We will get to the other way that it could be asked later. So that is then why this is in brackets. Okay, so now the last thing that we need to do for this note, guys, is we need the balance at the beginning of the year. Can you see this is the last block that needs to be completed for this 6 marks? Okay, and then obviously we have all of the other information. So all we need to do is we need to work from the bottom to the top. Okay, and we all know what to do. We then use the opposite signs. Okay, so instead of minusing this, we are going to plus. Instead of minusing this, we are going to plus. Instead of plussing this, we are going to minus, and then we will get the balance at the beginning. So let's start with the balance at the end of the year. So type in your calculators the 1,984,000 Rand balance at the end of the year, right? And then please remember that this 1,095,600 are these two amounts added together. So you subtract this total, okay? But remember, we are working from the bottom to the top. So we have to do reverse calculations now. So instead of subtracting, we have to add. So it's going to be plus 1,095,600 and then plus 174 three zeros, and then minus the 1578 500. And then we are going to get the balance at the beginning of the year, guys, which is then your 1,675,000 rand. Sorry, 1,100 rand. Okay, so that is how you do your retained income note. Remember to please study your formats for this specific note. Okay.